Hey everyone, and welcome back to Investing Talk podcast. Today, we're diving into a company that's been making some serious noise in the fintech world, Payoneer Global, ticker symbol PAYO. Now, they're all about simplifying global payments, for businesses and professionals. But the real story here, the thing that's got everyone buzzing, is their stock performance. It's been absolutely skyrocketing lately, and we're going to break down why that's so exciting, especially for potential investors like you.
You know what's really grabbing attention here? PAYO has surged over 100% just in the past year. And to give you some context, that's more than triple what the S&P 500 has gained. So we're definitely looking at a momentum stock here, outperforming not only the broader market, but also its industry peers.
Triple the S&P 500. Yeah, that's definitely going to turn some heads. So what's fueling this incredible run? Are they just that good? Or is there something else at play?
Well, let's look at their Q3 results for 2024. They're really stellar. A 19% jump in revenue, reaching $248 million. And their total volume grew by a massive 25%.
Okay, those are some seriously impressive numbers. Anything else about their performance that you think our listeners should be aware of?
Absolutely. Their business-to-business growth, B2B, was particularly noteworthy. We're talking about a 57% surge. This indicates that Payoneer is really hitting its stride, and helping businesses navigate that complex world of international payments. And if we zoom out and look at their full-year performance, they've already upped their revenue guidance to a range of $950 to $960 million.
So it's not just good performance. It's exceeding expectations. I can see why investors are excited. But let's be real here. Not every investor jumps on board just because a company has good numbers. So what's the expert take on all of this? What are the analysts saying?
Well, that's where it gets interesting. It's a bit of a mixed bag when it comes to recent analyst ratings. For instance, Citigroup, they boosted their price target on PAYO to $13, and they maintained their buy rating.
Okay, so that sounds pretty promising. But I've also seen that Wolf Research downgraded Payoneer to peer perform. And Keefe Bruyette also lowered their price target down to $11. So how should investors interpret these seemingly conflicting signals?
That's a great question. If we're seeing downgrades, why is the sentiment still positive? The key lies in the earnings estimates. Over the last 60 days, the consensus estimate for Payoneer's full-year earnings has jumped significantly, from $1.25 to 32 cents per share.
Wow, that is a significant jump. What's the main takeaway there?
It suggests a growing confidence in the company's future profitability. Even though some analysts have adjusted their short-term price targets, there's a widespread belief that Payoneer is on a path to sustained growth.
Okay, so we've got strong financials.
Yeah.
And a generally positive sentiment from the experts. But let's shift gears a bit and talk about the technical side of things. For those who might not be as familiar with investing, how can looking at the stock chart help them understand Payoneer's potential trajectory?
You're right. The chart can tell us a lot, essentially. Technical analysis is about studying the stock's price trends and patterns to try to predict where it might be headed. It's like a roadmap showing us where the stock has been and where it might go.
Okay, so what's PAYO's roadmap telling us right now?
Well, the chart is actually painting a pretty optimistic picture. PAYO is currently trading well above both its 50-day and 200-day moving averages, and this is a clear signal of a strong upward trend. These moving averages are key indicators that traders use to gauge the stock's momentum.
Right. And I know some people look at other indicators too, things like NACD and ADX. What are those telling us? Are they flashing buy signals as well?
Yeah, those indicators are generally reinforcing that bullish sentiment. But I don't want to get too bogged down in the technical jargon here. The main takeaway is that these indicators, combined with the price action we're seeing, are suggesting that the stock is likely to keep moving upward.
But there's always another side to every story. I noticed that the RSI, the Relative Strength Index, is hovering around 50.26. That's pretty neutral, right? What does that mean for someone who's thinking about investing in PAYO? Could things change?
You've got a sharp eye. You're absolutely right. An RSI of 50.26 tells us that the stock is neither overbought nor oversold. So this could mean that we might see some short-term consolidation, meaning the price could level off or maybe even dip a little bit.
So maybe a pause before the next potential upward move, like it's catching its breath.
Exactly. But it's important to keep in mind that the overall trend still looks very positive. Those technical indicators, along with the company's strong fundamentals, are painting a picture of a stock with real potential to continue its upward climb.
Now, beyond just the numbers, what strategic moves is Payoneer making? That could be contributing to this positive sentiment. Are there any specific actions that are generating buzz?
One major move is their planned acquisition of a licensed Chinese payment service provider. This deal which is expected to close in the first half of 2025, is a significant step for Payoneer's growth, especially in that booming Asian market.
That makes perfect sense. China is an enormous market. And for a company like Payoneer, being able to operate seamlessly there, that's a major advantage. But it's not just about Payoneer itself, right? We also need to consider the broader market context.
You're absolutely right. We can't ignore the bigger picture. The S&P 500 has been performing exceptionally well for 2 years straight now, and some analysts are predicting a shift towards small and mid-cap stocks. Now, if this trend actually plays out, a company like Payoneer, with its strong growth potential, could be perfectly positioned to benefit.
That's certainly something to keep an eye on. But before we get too carried away with all the good news, it's essential to address any potential risks or red flags. You know no investment is perfect, so what should our listeners be aware of? When it comes to Payoneer,
Of course, it's crucial to remember that every investment comes with some level of risk. And in Payoneer's case, there has been some recent insider selling activity. Specifically, Safi Goldman, their chief legal and regulatory officer, sold a significant number of shares.
now I know that insider selling can sometimes make investors nervous. What's important to understand about this particular situation? Is this a legitimate cause for concern, or is there more to the story?
Well, it's important to, not to jump to conclusions based on just one insider transaction. While insider selling can sometimes be a warning sign, it doesn't always tell the whole story. There could be personal reasons behind someone's decision to sell shares. It's not necessarily a reflection on the company's performance or future prospects.
Right. So it's like anything else in investing. Context is key. We shouldn't overreact to a single event, but look for patterns and consider the bigger picture.
Exactly. Always do your own research. And don't base your investment decisions solely on one piece of information, whether it's insider selling or even, a glowing analyst report.
That's a great point. It's easy to get caught up in the hype, especially when a stock is doing as well as Payoneer has been. But let's take a step back for a moment and think about what this all means for our listeners. They're hearing about this company, they're seeing these numbers, and they're probably wondering, how does this fit into my own investment strategy?
Absolutely. Payoneer is a really interesting case study, and it connects to some wider trends we're seeing in the fintech sector. The world is rapidly moving towards digital payments and cross-border transactions, and companies like Payoneer are really at the forefront of this shift.
It's true. It feels like the world is becoming more interconnected, especially in the business world. So for our listeners who might be thinking, okay, Payoneer sounds interesting, but what does this actually mean for me as an investor?
Yeah.
How would you sum up the key takeaways here?
Well, I'd say the first takeaway is that Payoneer is showing some really impressive growth. Their financials are strong, and they're making strategic moves to broaden their reach, especially with that acquisition in China that we talked about.
Right. And that momentum factor is hard to ignore. PAYO is significantly outperforming the market, which is definitely something that grabs the attention of investors who are looking for growth opportunities. But investing always comes with some level of risk, and we need to acknowledge that. What are some things that investors should consider when evaluating a company like Payoneer, especially those who are maybe newer to investing?
That's a really important question. I always emphasize the importance of doing your own research. Don't just rely on what you hear on podcasts or read in articles. You need to really dig into the company's financials, understand their business model, and think critically about how they fit into those broader market trends.
It's about being an informed investor, not just chasing the latest hot stock tip. And remember, never invest more than you can afford to lose. And diversification is crucial. Don't put all your eggs in one basket, no matter how promising a company seems.
I completely agree. A well-diversified portfolio is essential. It helps to reduce risk, and it can lead to those more sustainable long-term returns.
So we've covered a lot of ground today, from Payoneer's impressive growth to that exciting potential of the fintech sector. And we've also talked about the importance of doing your own due diligence before making any investment decisions. But before we wrap up, I want to leave our listeners with something to think about. We've seen how Payoneer is disrupting the world of global payments. They're expanding rapidly, particularly in key markets like Asia. And the world is increasingly embracing digital transactions. So here's the question. With all this potential for growth and, their strategic moves in the global market, could Payoneer be the next big thing in fintech? It's a bold question, but it seems like they're ticking a lot of the boxes.
Yeah, it's definitely a possibility worth considering. They've got a solid foundation, and they're really well positioned to ride that wave of, digital payments and cross-border commerce.
Yeah.
They have the technology, the partnerships, And definitely the drive to make a real impact on the industry. But just like with any investment, it ultimately comes down to how effectively they execute their vision and navigate those inevitable challenges that lie ahead.
Right. No guarantees in the market, that's for sure. But, hey, that's part of what makes it so exciting. It'll be fascinating to see how things unfold for them. And this is where we want to hear from you, our listeners. What are your thoughts on all of this? What stood out to you about Payoneer? Do you think they have what it takes to become a major player in the fintech space? We really want to know.
Absolutely. Head over to the comments section and share your insights. We always love hearing from our listeners and getting those different perspectives on these companies.
And while you're there, don't forget to subscribe to Investing Talk Podcast and share this episode with anyone you know who might be interested in the stock market or in Payoneer Global. We're here to help you navigate the world of investing and uncover those hidden gems in the market.
Thanks for tuning in, everyone. We'll catch you next time for another exciting look at the world of investing.